Bitcoin's last chance before 100k, whales are already in. Bitcoin is running out of time, and so are we. After days of hovering around 95k, the pressure is now on the verge of exploding. This is not just another retest. It's either the edge of a cliff or the final countdown to a breakout toward 100k. No halfway. Liquidity is starting to shift. Whales are quietly stacking, like they already know what's coming, and retail investors still asleep. So here's the big question. Is this our last real window before liftoff or just another trap? Look, I know I've been saying this a lot, but this isn't your typical bounce. It's not just price action. Something deeper is brewing. Hey everyone, Neil here. Welcome back to the channel. If you don't want to be left behind when the real breakout hits, make sure you're subscribed with notifications turned on. Now, let's zoom out for a second. This setup? It's familiar. Hesitation, compression, silence. The same pattern we have seen before every major move. Today, we will cover Bitcoin's current setup, whale accumulation, why this week's macro data could make or break the trend, and whether global M2 is the real driver behind it all. So, without further ado, let's dive right in. Bitcoin has been moving steadily in the early 95k range. Today, after dipping toward 93k alongside the Nasdaq fall, Bitcoin bounced back as the Nasdaq rebounded. This shows Bitcoin is still closely correlated with US stock movements, especially tech stocks. It reminds us Bitcoin hasn't fully decoupled yet. It is still sensitive to macro sentiments, economic data, and broader risk appetites. Meanwhile, haha, you didn't see that coming. Michael Saylor's strategy just bought another 14,000 Bitcoin. Take a closer look. You see that Michael Saylor holds about 50 billion USD worth of Bitcoin. He's accelerating accumulation faster than ever, showing that serious players aren't waiting for perfect conditions anymore. When institutions buy aggressively into uncertainty, that's usually a big signal. There's a bigger shift happening behind the headlines, and it's all about liquidity. After months of stress from tariffs, rate hikes, and tight financial conditions, global liquidity is finally starting to loosen up, and that matters a lot for Bitcoin. The macro liquidity index showed stress in April for the reasons I just mentioned, but now it's easing. That alone is a signal the tide could be turning, and on top of that, the dollar index, the DXY, is falling toward 98.99, another strong hint that liquidity is improving. The US M2 money supply just hit a new all-time high in March 2025. And that's not just a number, that's the engine of liquidity roaring back to life. And it's not just the US, global M2 is rising too. That means the money printer, quietly, steadily, is back online. So what does this all mean? More liquidity equal more investor appetite equal more upside potential for Bitcoin and asset markets over the next few months. Look, I'm not saying it's instant, but the table is being set for the next major run. The conditions are lining up. Let's turn to the heatmap now, because what is happening beneath the surface is critical. Over the past 24 hours, Bitcoin showed a slow grind upward after recovering from its weekend drop. We started around 94k on the 28th, and after an initial drop out to 93k, steadily pushed higher, reaching into the 94k, 95k zone by early today. But here's the catch. As Bitcoin climbed, massive resistance started to appear around 95.6k, 96k. You can clearly see it on the heatmap. Bright, thick yellow bands, which indicate dense layers of short liquidations and sell orders stacked at that level. Each time Bitcoin approached the 95k, 96k zone, buying momentum slowed down dramatically. Even though we tried multiple times to break higher, the sell pressure held strong. And that's why Bitcoin keeps getting rejected just under 95k. Support zones. After facing rejection near 95k, Bitcoin dropped back toward 94k. This zone has shown decent absorption, meaning buyers are stepping in and defending here. A thicker yellow-greenish band is visible between 93.5k, 94k, suggesting that if we fall again, this area will act as a stronger support. And instead of collapsing further, Bitcoin started to stabilize. For several hours, price action stayed contained between 93.5k and 94k, a clear sign that buyers were stepping in to defend the zone. A thick yellow-green liquidity band formed just below the price, around 93.5k, 94k, meaning buy orders were stacking up to absorb the selling pressure. During this phase, volatility dropped, candles became tighter, and Bitcoin began consolidating in sideways structure. Sellers currently have the upper hand. Right now, based on the liquidity map, sellers have slightly more control. The order book is heavier above price, around 94.8k, 96k, than it is below, meaning Bitcoin needs a real surge in volume to break out cleanly. Without strong bullish volume, price is likely to get repeatedly rejected when attempting to break 95k. Summary of current structure: resistance 95.5k, 96k, support 93k, 93.5k, and the stronger support 92k, 93k. Possible scenarios from here: bullish breakout scenario. If Bitcoin can break and close above 95.5k with a strong volume, expect a rapid move toward 98k, 100k. This will likely trigger a short squeeze as trapped shorts scramble to cover their positions. Bearish rejection scenario. If Bitcoin keeps getting rejected at 95k and loses 93k support, the next likely stop will be around 91k, 92k. Conclusion: right now, Bitcoin is squeezed between massive resistance and fragile support. The fight between bulls and bears is intensifying, and the winner of the 95k battle could determine the next major trend. Until we get a clear breakout or breakdown, expect a lot of chop and fakeouts around this level for the next days. In short, break above 95.5k equal bullish breakout opens. Drop below 93k, 94k equal deeper pullback risk increasing. Stay sharp, because the real move is coming. Now, let's talk about the whales. If you check the Heatmap and CVD, the largest whales, between $1 million to $10 million, in brown and purple, are steadily accumulating. Meanwhile, smaller players, orange, green, purple lines, are still selling or staying cautious. The latest whale behavior shows that whales are stacking hard. Just for context, now here is something worth watching. Whale holdings, that's the blue zone on this chart, are starting to tick upward again. Oh, let me be clear, this doesn't guarantee that price will rise. In fact, back in 2018 to 2019, we saw whale accumulation increase, but Bitcoin still trended lower. So it's not always a direct cause and effect. Likewise, from 2021 to 2022, whale balances dropped while Bitcoin struggled to make new highs. But that wasn't just because of whale selling. Macro factors played a huge role too. That said, more often than not, when we see sustained accumulation, especially from large wallets, it tends to align with long-term bottoming phases or the early stages of new uptrends. And right now, that blue zone on the chart, showing net whale accumulation, is ticking upward. It doesn't guarantee an immediate rally, but it may be a signal that large players are preparing for what's next. And as I announced yesterday, this week is packed with market-moving events. Tuesday, JOLTS job openings. Wednesday, ADP employment GDP and the Fed's preferred inflation gauge, PCE. Thursday, ISM manufacturing PMI. Friday, non-farm payrolls, unemployment rates, average wages. How the market reacts to these macro reports will likely decide Bitcoin's next move. If the data shows the economy slowing or inflation easing, it could trigger a risk-on environment and strengthen the case for Fed rate cuts. That will boost Bitcoin and support a breakout above 95k. But if the data comes in hot, with strong job growth or sticky inflation, it could delay rate cuts, strengthen the dollar, and put pressure on Bitcoin. Speaking of which, the next Fed meeting is just around the corner. It's scheduled for next week, and right now markets are pricing in a 90% chance that the Fed holds rates steady, and just a 10% chance of a small cut. Of course, those probabilities can shift very quickly based on the data that drops this week. So, in a short, if stocks rally, Bitcoin will likely rally too. If stocks crash, Bitcoin could be dragged down again, at least in the short term. Either way, I will keep you updated. But one thing is clear, Volatility is coming. Be ready. So, to wrap things up, Bitcoin is standing right in front of the massive 95k door, holding its breath. Whales are already moving. Global M2? All-time high. The dollar? Shifting into weakness. Liquidity? It's changing direction. And yet the market is still quiet. But that's always how the real moves start, in silence. Now, with all the big economic data dropping this week, we're about to find out. Is this where Bitcoin finally takes off? Or are we in for one last shakeout? Either way, one thing for sure. This isn't just a bounce anymore. It's feeling more like the start of something bigger. Are you ready? Because Bitcoin doesn't move slowly. When it moves, it explodes. Drop a comment below. Do you think we're about to smash through 100k? Or do you see one more fake out coming first? Thanks for watching today. If you found value in this video, don't forget to like, subscribe and share it with someone who's not ready yet. As always, stay sharp, stay informed, and I will see you in the next one. Bye bye.